What's up, investors? It's Mike from MJF Invest. Today's video is going to be about two companies that I made plays on and one company that I'm looking for an entry point on. Before we get into that, please hit that like button. Consider subscribing to the channel for future content. Let's talk stocks in the comment section. Also remember, I'm not a financial advisor, so you should be doing all your own research. And ultimately, it is your decision whether you want to buy or sell any of the stocks I talk about on my channel. I wanted to talk about a couple of plays that I made, and also a company that I put on my watch list. I'm going to be waiting for a little bit of a pullback in charge point, ticker symbol SBE, but I'm going to get into that later. I'm going to talk about them at the end of the video, so make sure you stick around. We're going to cover a lot. The other two companies I wanted to talk about was I bought a call option for LCA, Golden Nugget. It's a SPAC play. There's a merger about to happen. Lancadia Holdings, ticker symbol LCA, is merging with Golden Nugget Online Gaming, and the ticker will change to GNOG. LCA had a little bit of a pullback during the week. I decided to buy a call option with a $15 strike price. It's a little bit of a gamble. There's risk associated. It's a SPAC play. Keep that in mind. But that's the type of investor I am. I like to keep a nice balance of safe, strong, and steady investments, but I'm also not afraid to take a risk every now and then. I use the research to manage the risk. LCA, I think once this merger takes place, I think there's some value there. I'll be looking for post-merger to sell my call option immediately. The online gaming industry is a $20 billion market opportunity in online gaming. And with the current stay-at-home climate, it has significantly accelerated consumer adoption of online gaming. The pandemic-resistant and scalable business model with 30% profitability margin. So I like that. That's a high profitability margin. Golden Nugget is a household name throughout America with a national database that focuses on profitable gaming customers. It's a well-established leader in New Jersey, the largest online gaming market in the United States, and it has an award-winning management team with history of successful execution. Again, I'm not going to dive into it too deeply, just to give you an idea. Obviously, online gaming is not legal in all 50 states quite yet. As it becomes more legalized, Golden Nugget, especially in the online gaming, we know DraftKings is the sports betting leader. I looked at both websites. DraftKings is definitely better. I'm not, I'm pretty sure that DraftKings is going to win here. So as a long-term investment, I don't like Golden Nugget. I mean, I could see value, but I'm saying if I was going to buy shares and keep it long, I would have had to feel confident that it was going to, be the leader in sports betting. But I don't see that. So I look at this more of a momentum play. It has some opportunities. I could see people getting excited about it because it has some prospects. We're pre-merger. The merger should be coming up anytime now. I believe the vote is coming this week. I'll be looking to dump that call option as soon as I could get some momentum with it. I wanted to talk about the second play that I wanted to talk about was Marcus Corporation, ticker symbol MCS. Marcus Corporation is gauged primarily in two business segments: movie theaters and hotels and resorts. The company's theater operations include approximately 91 movie theaters with 1,106 screens throughout various states such as Wisconsin, Illinois, Iowa, Minnesota, Missouri, Nebraska, North Dakota, Ohio, Texas, and Virginia, including one movie theater with 6 screens in Wisconsin owned by a third party and managed by the company. The company's hotel and resorts operations include approximately 8 wholly owned or majority owned and operated hotels and resorts in Wisconsin, Illinois, Nebraska, and Oklahoma. It also manages approximately 12 hotels, resorts, and other properties for third parties in Wisconsin, California, Minnesota, Nevada, Nebraska, Illinois, and Texas. The company owns or manages approximately 5,400 hotel and resort rooms. So this is a play on the entertainment industry and the travel industry. They own hotels and resorts, and they also have movie theaters. This is strictly a momentum play. I viewed this as a COVID play. COVID has destroyed this industry. I got in at $10.80 a share on November the 17th. I set my stop losses. I don't have a high risk for this. I see support at $9.85. So that's where I set my stop losses. I don't feel confident enough or have enough conviction here to go much further than that. I bought 100 shares. It's just a quick swing play for a couple of reasons. I felt good about it, but just to be upfront, I don't have high risk tolerance in this trade. So 985 is my marker. If it drops below that, I'm going to sell and just cut losses and move on to the next trade. So keep that in mind. But for a couple of different reasons, I wanted to give this a shot. I see value and I see some upside. So a couple of things made me think that there's some upside in the short term, especially with more vaccine news and as we break out of this pandemic, which I hope is, soon. So that's the risk associated, that if we go back into another long form lockdown, this trade could fall apart. So definitely risk, but here's what my thinking was in buying these shares right now. Investors who take an interest in the Marcus Corporation should definitely note that independent director David Baum recently paid $25.34 per share. Insider buying is something that I like to pay attention to, and institutional ownership is also something I like to pay attention to, and it's very strong for this company. Also, noteworthy, the insiders average is about $25.92. So just those two alone, I see a lot of upside. We could at least maybe possibly double our money. That's what I'm looking for again, but I'm not willing to risk too much. Again, I'm setting my stop losses at $9.85. And again, I'm not necessarily big on the movie theater industry over the long haul. This is strictly just a quick value play. I mean, at some point, this pandemic has to go away, right? At least we hope. And right now, this looks like a company that got beaten up pretty bad by the virus. So this is a recovery play in a sense. Again, I'm looking at it as a swing trade, and we're looking at the institutional owners here. BlackRock owns almost 4 million shares. The Vanguard Group over almost 1.5 million. I seen that George Soros fund also added shares. So there's a lot of institutional buys here. And to me, that's the most attractive thing about this trade. Just a quick swing trade. Again, with a low. I'm going to cut my losses quickly. I have my stop losses at $9.85. So I won't ride this one all the way down. If it drops, double my money here over the next, beginning of Q1 would be when I'd be looking to dump these shares. And the company I wanted to talk about was Switchback Energy. Is merging with ChargePoint. The SPAC plays are getting hot again. Again, I would tread lightly because we've seen how quickly money moves out of this market as well. But I think that ChargePoint, very big company. I think we're looking at a really big company in the future. Keep in mind, it's been on quite a run lately. I believe it's trading in like the $27 range now. So it's up like 40% or 30% over the last week or two. For me, I'm personally going to be looking for a little bit of a pullback. I don't like to get into the habit of buying at all-time highs. That doesn't mean that, that's the best way to go about it. For me personally, I would just feel better if I could get this down closer to $20. So that's what I'm going to be looking for. If I can get a pullback into the $20 range or lower, I mean, I'm loading the boat. I would consider that my buy zone. I'm going to continue to do research on it. What ChargePoint is, charging stations for electric vehicles. And if you believe in the electric vehicle revolution and believe that's the way we're going with climate change, these are the kinds of companies that we can invest in now and hopefully just grow into these ideas. And ChargePoint has these little stations. They could be at home, at work, or just around town, put around local towns where you could stop, get a charge. You could get one at your house. So this industry will grow, obviously, as we continue to reduce our carbon footprint. These companies will emerge. But again, it's at an all-time high right now. I'm waiting for a pullback. That doesn't mean that that's the right way to do it. If you want to look into this company a little further and you think that $27 is a fair value, I definitely think it's going to be more than that. I think it's going to be, you know, this could be $100 stock 2-3 years down the road. So at that point, I guess it really doesn't matter what your entry point is. I guess you just have to decide if this is a long-term investment or not. I'm going to continue to look into it. I may do a video on it by itself. So those are the 3 trades. The LCA call option for $12.18 with a $15 strike price. I bought 100 shares of MCS. But I also remember I set my stop losses for $9.85. I don't have a lot of risk tolerance for this trade, but I'm looking, you know, to double. I'm looking to double my investment over the next few months. And also, I'm looking to get into ChargePoint, ticker symbol SBE. But I'm waiting for a little bit of a pullback on that one. Let me know what you think. Thanks for sticking around to the end of the video. Don't forget to hit that like button. Consider subscribing to the channel for future content. Let's talk stocks in the comment section.